if we hit a negative sign, then Excel sees that as we're going to put in a formula. Note that Excel put in the equals for me. I didn't need to put in the equals. Excel says, well, if it's a negative, I'm going to put in an equals for it, and it does that transaction for us. What's the credit going to be for? Why are people going to pay us $5,000? Because we earned revenue. So revenue is over here. We already know we're going to credit it because we had to debit receivable. Let's think about it. Does it make sense? Revenue has a credit balance represented by the fact that it has brackets here. It only goes up. We need to make it go up because we earn more revenue. How do we make it go up? We do the same thing to it, which in this case would be another credit. So it does make sense. So we're going to say, okay, copy that, paste it in cell C12. Here is our journal entry. We are now going to post that to the general ledger, starting with accounts receivable. So here's our GL, here's accounts receivable, and we debited accounts receivable there. So we're going to go to the next transaction here and be in the debit column, which is cell K18. K18 equals, we're going to point to D11. When we hit enter, this running balance should go back up to 500. We could see that that 500 also appears here. That is coming from there. Now we're going to post the other side because we're out of balance by the 500 until we post the revenue. So revenue, it's going to be in order. See, it's in order here. Assets, asset, asset. Accounts payables and liability, owner's equities, capital, and then revenue. Revenue only has credit, so we're going to be in the credit side in the general ledger under revenue, and we are in cell T10. We'll say equals. I'm going to go all the way back over here to that revenue account in cell E12, and before I hit enter, I'm going to look at it. It's going to go up to enter 10.5. There's the 10.5 here. Where did that come from? Comes from the general ledger. So that is that. We're back in balance. We're going to post this. The next transaction says perform work on account and invoice the client again. So same transaction. This is going to be a typical thing when we work in the accounts receivable. We bill and then we collect on it. So in this case, we sent out another bill. Is cash affected? No, not yet. We sent out a bill. We got an IOU once again. So we sent out the bill. We're assuming that we're owed on it. Accounts receivable has a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So I'm going to copy that. Going to put it on top, right click, paste 1, 2, 3. It's going to be $600 in the debit. Then I'm going to go in the credit side. We're going to say negative, left once, up once, enter. So that puts the negative. You could just type it in there, negative 600, but I'm going to start using formulas. I'm going to start flipping the signs, see what the formula will do. And then the only question is, what account will there be there? Why are people going to pay us? Because we earned revenue. We earned it at this point in time. Therefore, we should recognize revenue now, even though we have not yet received it. Should we debit or credit revenue? Well, we already know we're going to credit it because we had to debit the accounts receivable. Revenue has a credit balance. It only goes up. Therefore, we must be crediting it again. So it does make sense that we credit it. So I'm going to copy that, paste it here. And then we're going to post this journal entry to the general ledger here, starting with accounts receivable, which is an asset, second favorite asset. We are going to debit it here. So we're going to debit column here in the next transaction, which is in cell K19. K19 equals, point to the 600, the 500 then should go up in the debit direction to 11 in this case. That also changed here on the trial balance. That number is coming from here. We then are out of balance until we post the revenue. So the revenue, it's in order, assets, liabilities, equity, then revenue, assets, liabilities, equity, then revenue. Notice revenue only has credits. We're going to credit it again. Revenue only goes one way, so does expenses. They only go one way, so we're in cell T11 equals, going to point to that credit, and revenue is going to go up once again to 11.1. We can now see that 11.1 reflected on the trial balance. Where did that come from? It's coming from there. Puts us back in balance. What happened to net income? Went up. So remember, it went up because we're talking about revenue minus expenses. We don't have any expenses in this example. So then we have received cash on account for work done. So obviously now we're receiving the cash for the work we did up here. So we sent out the invoice. We got the check in the mail. So is cash affected? Yeah, it's affected. We got more of it. Cash has a debit balance. We can see here because it does not have brackets. We got more of it, so it needs to go up. How do we make something go up? We do the same thing to it, which in this case would be another debit. Going to copy that, going to put it on top in the debit section. We're going to put the 500 in the debit. I'm going to go into the credit. We're going to have to credit something for the same amount. So in cell E18, I'm going to say negative, left once, up once, and enter. What are we going to now credit? Well, why are people paying us? Because we earned revenue, but we already recorded the revenue. If I record it again, we would be increasing revenue twice. What's really happening is people owe us money at this time, and now that is now going down. So that 11.1 is what people owe us. People now has paid us 500 of it. Therefore, that needs to go down. We already know it's going to be credited. Does that make sense? Well, this is a debit balance. To make it go down, we do the opposite thing to it, which in this case would be a credit. So let's post it and see if it goes down like we think it should. This is the general journal. Here's the general ledger where we will post it to. Here's cash up top. So cash right underneath on the debit side. First in cell K10 equals, pointing to the 500. That, once we hit enter, should increase cash to 10.5, which also is represented here and there. We can see where that comes from. Out of balance by 5 until we post the receivable. Note the receivables right underneath it here. We are in the credit column there. So we're going to be in the credit column in the next transaction on cell L20. Then we can say equals, point to the 5 there. And the balance should then go down because that's credit and this has a debit balance. And that goes down to 6. And that would make sense here. So then the 6 is also represented here. If we say where's that coming from, it's coming from there. If we wanted to then analyze the receivable account in terms of where did these numbers come from? Well, they came from here. What's the history? If we summed up the debits, you don't need to do this. They add up to here. If we summed up the credits, they add up to this. If we take the difference, the debits are going to win by 600. That's always going to be the case because it's an asset balance account. Either people owe us money or they don't owe us money. If we owe them money, then it's a liability. So this is an asset account where the assets will always win in this case. And this will be the typical activity of an accounts receivable, meaning we got money, we did work, people owe us, then they paid us. Balance goes up, goes back down. We billed someone, goes up, we billed someone, goes up, they paid us, it goes down. That'll be the typical activity. If we look at the T account here, the debits will always be beating the credits. It's just a matter of how much. If we credit it, the debits will win by less. If we debit it, the debits will win by more.